Philip Securities analyst Alif Fahmy has initiated formal coverage on Palantir Technologies with a buy rating, immediately signaling confidence in the company's long-term trajectory. Alongside that rating, Fahmy established a price target of $208 per share, which represents over 25% upside compared to where the stock has been trading recently. This initiation adds fresh momentum to the Palantir Technologies story at a time when investor attention around artificial intelligence adoption continues to intensify. According to Fahmy, Palantir Technologies is entering a new phase characterized by faster and more durable growth. He believes this acceleration is being driven by two powerful forces working in tandem. First is sustained strength in demand from the United States, which remains the company's most important market. Second is the rapidly expanding adoption of Palantir Technologies' artificial intelligence platform across commercial enterprises. As more businesses move beyond experimentation and into full-scale artificial intelligence deployment, Fahmy sees Palantir Technologies positioned as a core infrastructure provider rather than a niche software vendor. Looking ahead to the company's financial outlook, Fahmy expects revenue growth to surge meaningfully in the upcoming year. He forecasts that Palantir Technologies' revenue will rise 47% year over year, reaching approximately $4.2 billion. This anticipated growth rate reflects a sharp acceleration compared to prior periods and underscores the analyst's belief that the company is moving into a more mature and scalable growth phase. Importantly, Fahmy identifies the commercial segment as the primary driver of this expansion. He expects commercial revenue to increase 51% year over year, a pace that exceeds the 43% growth he projects for government revenue. This widening gap highlights a strategic shift underway at Palantir Technologies, as the company increasingly expands its footprint beyond government and defense contracts into private sector industries such as healthcare, manufacturing, energy, and financial services. As more companies integrate artificial intelligence into their core operations, demand for Palantir Technologies software platforms continues to deepen. At the same time, profitability is expected to improve significantly alongside revenue growth. Fahmy anticipates that net profit will nearly double in the coming year. This improvement is expected to be driven by stronger operating leverage as the company scales, as well as a growing mix of higher value and longer duration contracts. As Palantir Technologies signs larger enterprise deals and expands existing customer relationships, margins are positioned to benefit from more efficient cost structures and recurring revenue streams. Geographically, the United States remains the central engine powering Palantir Technologies' growth. Fahmy notes that the region currently accounts for roughly 66% of total company revenue. He expects this dominance to continue, with United States sales projected to increase 66% year over year in the upcoming year. This growth reflects strong momentum across both government and commercial customers within the region. On the government side, demand remains robust as global geopolitical tensions continue to rise. Increased spending on intelligence, defense, and national security initiatives in the United States is creating sustained demand for advanced data analytics and artificial intelligence platforms. Palantir Technologies, with its deep roots in government partnerships, is well positioned to benefit from these trends. Meanwhile, the commercial side of the business is showing clear signs of acceleration. Fahmy highlighted that average deal sizes within the United States commercial segment roughly doubled during Q3 of the year. This increase signals that customers are moving beyond pilot programs and committing to broader deployments of Palantir Technologies' artificial intelligence platform. As these deployments scale, they not only drive higher revenue, but also strengthen customer lock-in and long-term retention. Despite the strong growth outlook, valuation remains a topic of debate. Fahmy acknowledged that Palantir Technologies stock trades at elevated levels compared to traditional software peers. However, he argues that the company's rapid growth rate, expanding addressable market, and improving fundamentals justify the premium. In his view, these factors leave meaningful room for additional upside as execution continues. From a broader analyst perspective, Palantir Technologies currently holds a hold consensus rating on TipRanks. This rating is based on 6 buy ratings, 10 hold ratings, and 2 sell ratings issued over the past 3 months. The average price target across analysts sits at $193.76, which implies approximately 17.20% upside from recent trading levels. While opinions remain mixed, the addition of a new buy-rated analyst strengthens the bullish case. Beyond Palantir Technologies specifically, recent developments in the artificial intelligence infrastructure space are also shaping investor sentiment. Accenture shares moved higher following news related to a major sovereign artificial intelligence data center initiative. Accenture stock rose roughly 1.6% to $285.18 during Thursday afternoon trading after the company announced it had been selected, alongside Palantir Technologies, to help develop and expand artificial intelligence-focused data centers across Europe, the Middle East, and Africa. This announcement matters because investors are increasingly focused on whether artificial intelligence spending is translating into real-world infrastructure commitments. Markets are looking for evidence that artificial intelligence investment is moving beyond theoretical discussions and limited trials into large-scale initiatives that require substantial spending on hardware, power, and supporting systems. The Accenture and Palantir Technologies collaboration suggests that this transition may already be underway. For Accenture, the opportunity comes with challenges. The firm has positioned itself as a key integrator of complex technology stacks, and the success of this strategy depends on its ability to convert high-profile initiatives into recurring long-term revenue streams. This is especially important as governments and regulated industries push to keep sensitive data within national borders, increasing demand for localized and compliant artificial intelligence solutions. As part of this broader trend, a United Kingdom-based sovereign artificial intelligence initiative has selected Accenture and Palantir Technologies to build next-generation artificial intelligence data centers across the Europe, Middle East, and Africa region. The effort will leverage Dell artificial intelligence factory systems and NVIDIA infrastructure, with Palantir Technologies chain reaction software serving as the operational backbone for the rollout. Accenture leadership described the collaboration as a new approach to managing secure, resilient, and scalable artificial intelligence infrastructure. Sovereign artificial intelligence refers to systems designed so that data storage, processing, and oversight remain fully within a country's legal and regulatory framework. This concept has gained increasing importance in Europe, where regulatory scrutiny is tightening and geopolitical risks are rising. Following the announcement, Dell shares climbed roughly 4.1%, while NVIDIA and Palantir Technologies also posted modest gains. The broader United States equity market also trended higher during this period. Major index exchange traded funds advanced between 0.8% and 0.9% during afternoon trading, reflecting improved sentiment across technology and infrastructure-related sectors. Accenture shares later closed up 2.94% at $280.72 on Wednesday, ending a three-day losing streak as information technology services stocks helped lift the broader market. Investors continue to closely monitor Accenture's bookings, which represent the value of newly secured contracts and provide insight into future revenue trends. In its most recent earnings report, Accenture disclosed first-quarter bookings totaling $20.9 billion. Within that figure, advanced artificial intelligence bookings accounted for $2.2 billion, underscoring growing demand for artificial intelligence-driven services. Even with these positive developments, uncertainty remains around the near-term financial impact of the Sovereign Artificial Intelligence Initiative. The announcement did not include detailed financial terms, and large infrastructure programs often face delays related to permitting, power availability, and shifting customer budget priorities. As a result, markets are likely to remain cautious until clearer revenue contributions emerge. Looking ahead, Accenture's annual general meeting is scheduled for January 28th, followed by its second quarter earnings call on March 19th. Traders and long-term investors alike will be watching closely for updates on bookings trends and confirmation that artificial intelligence infrastructure investments are converting into sustained demand. Overall, the initiation of buy-rated coverage on Palantir Technologies adds another layer of optimism to an already complex and evolving narrative. With strong United States demand, accelerating commercial adoption, improving profitability, and growing exposure to global artificial intelligence infrastructure initiatives, Palantir Technologies continues to position itself at the center of the artificial intelligence revolution. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.